Hi everyone, my name is Peter Today we'll continue creating financial model of a delivery business from scratch. We've created a cash flow statement, and now any entrepreneur is asking just one question: how much money do I need to start my business? So when you've gathered all your revenues, all your expenses, you may see inside the cash flow statement the real amount of financing that you need to start your new business idea. And today I'll show you different ways of how you can do that. First of all, you can do it manually. The general rule for this is the cash balance at the end of the period, so the last line of cash flow statement must be equal to zero or more than zero. If you have negative values like this at cash balance at the end of the period, this means that you don't have enough money to start the business. So you need to put more your own money, your equity, or you have to take a loan. So this means that you don't have enough money, you have a cash gap. So if you look at our cash flow statement, you may see that we have a period of we have cash balance in the period. The first way to calculate the amount of financing, let's say that we don't have a loan, we just invest our own money from our pocket. So we just take the equity line here, and we just do like this. So we look at the value, negative value here, and put this value with the opposite sign here. So you go through the timeline and see. Also, you can, for example, look at this negative period, and you can find out the maximum negative value here. So here we invested this enough, then here we see that we don't have enough, and we can see how it's getting shorter and shorter.
So, for example, we take additional money, then we need, for example, 19,500. So this is the point when our project starts generating its own cash flow, and later additional money in our business. Then we can create just a total for this line. And see how much money we need to start our business idea. Also, for example, we may have a loan in our project. For example, we decided to take in February 2021 a loan. So this will be the term of the loan, interest rate, grace period for interest and principal payments. Then back to the cash flow statement, here we can see the loan. Then we can also see some months with some period with negative cash balance. So we just add our money plus to the amount of loan that we already taken. So here is the moment when the project starts generating its own cash flow. Then we go at the end of the timeline, create a total for these two lines. Then we just create a total. So this means that we need this amount of financing for our business idea. This is the manual way to calculate the amount of financing that we need. But also you can create an automatic automatic formula for calculating amount of financing. And let me show you how you can do that. So what we do, we just take result from operating activity plus result from investment activity plus loan minus in principal payments minus interest payments. Then we create cumulative formula. And now we will just find a minimum value inside this timeline. So this is the minimum value inside this timeline. Now I can go, for example, here. Then we take the opposite sign of the minimum value that we found inside this timeline. Put it here, press enter. And now if we go through the timeline, if we look at the cash balance at the end of the period, we'll see how at the first period we just move away all these values. And now we go through the timeline and see how this amount of financing is getting less and less. Oops, this is the moment when we have 0, and then our project starts generating its own cash flow. This is mathematical moment in March 2023
when we don't need to invest our own money in our business idea. Also, we can add, for example, a loan. So here we can see how we added a loan. And if we look at it at our timeline, we have mathematical 0. And then our project starts generating its own cash flow. So this is automatic way. Here is the amount of equity. This is the loan, and this is total financing needed to start our business. So you can adjust manually the amount of financing looking at the last line of cash flow statement, cash balance at the end of the period. Or you can create automatic algorithm to see the most accurately how much money you need to start your business. So the next video will be devoted to the overall model overview. I will go through all the inputs. I will show all capabilities and what general questions always entrepreneurs ask when they build this financial model, what they want to what numbers they want to play with, what is important about delivery financial model, why you should build financial model this way, with this level of accuracy, because this is very important. The more accurate your financial model is built, the more accurate the amount of financing you calculate, you will be able to see the most accurate scenarios of when you start your business idea, because this will help you to see your business more clearly. You will be able to see the risks that you may face, how you may see the probability of this or that risk which can occur in this or that situation. So when you create a detailed financial model, you can play with a majority of inputs and see and analyze the impact of this or that input, or this or that of the impact of this or that parameter on financial efficiency of to the payback period, simple, discounted, net present value, amount of financing. And you will look at your business idea from a new from a new point of view. So this is very important for an entrepreneur to see his or her business idea from a new side, and analyze whether your business idea is stable or not, what should you adjust in your business concept. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your business idea or for your existing business. We'll help you with that. So see you next videos. Thank you and bye.